That point was really just in terms of outperformance. Once again, we see those Chinese names that trade in the United States. I know I obsess on them, but I do. But they are really like 6 or 7% higher. And in the past 2 days, we've seen them rally back from that 15% drop on Monday. They're up about 12%. And names like Pinduoduo, JD.com, and Baidu, they are among the top gainers in the NASDAQ 100. And there were some reports about maybe, Chinese initiatives, the Chinese cabinet issuing rules on promoting private businesses. So, supporting business, because I think there was so much nervousness off of the weekend and the Chinese Party Congress, where it just seemed to be that politics was going to trump all else, including business and the economy and markets. And so we continue to try and figure this out.
That nervousness, Carol, it is still there. And there's a great article in the Bloomberg all about Xi's vow of world dominance by 2049, sending a chill through markets. Xi Jinping, as you mentioned, has put himself in position to rule for at least another decade and possibly for life. The question now is what he's going to do with that power. We had a great conversation earlier this week with Andy Brown, with Eric Schatzker as well, of Bloomberg's new economy forum, which is happening in just a few weeks. And a big question that we talked about is, okay, well, what ends up happening to companies in China? And also what ends up happening to U.S. companies that want access to the Chinese consumer?
Well, and what's interesting is, he's talked about, national strength within China. He's talked about international influence. At the same time, you have, complete or chronic shutdowns because of COVID, right? The COVID zero policy. And you have other policies on Taiwan, also on technology control, oversight of, tech development and what goes on, or oversight on not creating too many billionaires. And so you do wonder, how do you have that influence against that backdrop? Or what does it mean?
Well, that's what markets are trying to figure out too.
Hence the up and downs that we're seeing this week.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. We begin with a developing story. Tesla said to be facing a Department of Justice probe over self-driving claims. That, according to Reuters. Reuters says DOJ launched the probe last year. Tesla shares are up now by 1.1%. Stocks trading mix. We've got the Dow up 63 points, a gain there of 0.2%. The Dow has been swinging between gains and losses. We've got the S&P down 21 now, a drop there of 0.6%. NASDAQ lower by 205 points, down 1.8%. The NASDAQ 100 index down 2.1%. Shares of Alphabet, parent of Google, weighing on the NASDAQ 100 index, down 9.5%. Microsoft down 7.3%. After the close of trading today, we will be hearing from Meta Platforms, parent of Facebook. Meta down 5.8%. Also reporting after the bell, Ford shares up now by about 0.3%. Again, we've got the 10-year yielding 4.01%, the 2-year 4.42%, spot gold up 0.7%, $16.64 the ounce, and West Texas Intermediate crude up 3.3%, $88.15 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. We do really appreciate it. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Britain's new Prime Minister Rishi Sunak is widely seen as pragmatic and competent, virtues lately all but absent from British politics. Investors have greeted his rise with relief, but that might not last long. Sunak inherits a party deeply split over Brexit especially, but also immigration, taxes, regional inequality, and other contentious matters. Meanwhile, the UK has been especially hard hit by the soaring cost of gas, making its inflation among the highest in Europe. Sunak's pledge to restore responsibility may calm markets, but standing by that commitment as the central bank raises interest rates makes a serious recession possible. After the past few weeks, a prolonged spell of boredom is just what the UK needs, but events are unlikely to oblige. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car, I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just about 9 minutes left in today's trading session. We're just about 13 minutes away, I think, from Meta earnings. We're also going to hear from Ford. Who am I missing? ServiceNow.
I don't know. I was reading notes.
What?
You said Ford.
Oh, VF Corp.
Thank you, Ari.
Yeah, on it. But Meta's the big one that we really want to know when it comes to ad spending. And
Don't forget about tomorrow.
What?
Alphabet.
Can we get
These
through
yesterday?
today
Apple tomorrow and
first?
Amazon.
Come on.
Yeah, we can, but
be in
I'm
the
still
moment.
okay. I'm trying.
All right, Meta, by the way, down 6 or 7%. As we've seen, big tech, right? Microsoft, Google, really under pressure, underperforming. Even though the Nasdaq's down 2%, they're down a lot more today.
Okay, so dragging down the Nasdaq 100, the
Yep.
Nasdaq Composite, the S&P 500, does it say anything bigger about the economy and about other companies? That's the question we're going to pose to David Kudla, founder and CEO and chief investment strategist as well at Mainstay Capital Management, close to $4 billion in assets under management. David joining us on the phone from Michigan. David, how are you?
Good. Good afternoon, Tim. Good afternoon, Carol.
Hi.
Good afternoon. So we're in the midst of it. We had Alphabet, of course, and Microsoft yesterday. Those shares just tanking today and dragging down the indices. Does it say something bigger? I'd asked this question to Ardina Bass a little earlier, but I'm curious what you think. Do these results say anything bigger about the U.S. economy and the global economy?
They're saying something bigger about tech, and they have such a, these two stocks alone have such a weighting on both the S&P and especially the NASDAQ composite. Alphabet and Microsoft together make up 9.4% of the weighting for the S&P 500 and 17.2% for the NASDAQ composite. So certainly, as much as both of them are down today, they're weighing down those indexes a lot. But what we've seen with Alphabet, Google, YouTube, Snap, we've seen that advertising revenues are falling. And I think it says, this is big tech week for earnings, and it's saying more about what's happening with ad revenue for some of these big tech companies, and the revenue on ad spending is falling, revenue is falling as a result of that. We've seen that these companies have been the big leaders. They're now looking at hiring freezes, maybe even cutting staff. So certainly we're seeing the impacts of the broader economy impacting these companies.
What does it tell you about the broader economy, David?
Well, if we broaden out in terms of what we expected in the third quarter, that we would start to see earnings impacted more, and certainly earnings were revised down for the third quarter. Earnings were as high as 9.8% back on June 30th, anticipated for the third quarter. We're down to about 1.5% expected. So on those lower expectations, 72% of companies are beating that have reported so far, but we've only had a little more than 20% of S&P 500 companies reporting. Certainly, as we look into next year, we'll see. We expect the economy to affect earnings more, as was expected this quarter, but didn't really see it yet.
Right.
But certainly we're seeing that what the Fed is doing is certainly having an impact on the economy.
Right, exactly. All right, so, we do this on a regular basis, as you probably know, but it's like, are we bottoming out, though, on the equity trade, and how much of the bad news or expectations around it is factored in? Are we topping out for rates? We can have those conversations, but at the same time, you guys and everybody else, has to put money to work, or you can park it in cash or some cash-like investment. What are you doing in this environment?
So we had this, we had a low at the beginning of October, a lower low than we had in June. And we don't know yet. I'm not even willing to say that it's the low for this cycle, but it's certainly an intermediate term low and an investable low because, we have, encouraging data in this earnings report that we didn't think. I think the broader impact earnings, as we talked about, has been pushed out into the fourth quarter or next year. So we're seeing this rally because we see as the terminal rate for the Fed is approaching, whether we call it a pivot or a pause or whatever it may be. And at the same time, we're seeing these decent earnings. So we think that we've got an investable rally here. We are invested in growth and value. What's become more attractive more recently is small cap stocks that we've added to our portfolio, but we've got our portfolio hedges in place still because we know there's more volatility ahead.
So help us understand how you're looking at the Fed's terminal rate, not in terms of what you think it's going to be, but how long the Fed is going to leave interest rates. And look, I know everything is context and historical context here, but I would argue that in my lifetime, this is high for the Federal Reserve. Would you say that? How long would you say that the Fed will leave rates high?
Well, it's a tough question, and I say that because the Fed has never stopped a hiking cycle with headline and core inflation above the Fed funds rate. They've always reached a positive real rate. We're a long way away from that right now. We'll see what our next inflation rate is. We'll see what that trend becomes. But, if we're talking about a terminal rate, if it's somewhere between 4.5% to 5% right now, maybe a little bit higher depending on whose prediction you believe, that doesn't get us above the inflation rate on headline or core. And so that means there's more to go. Now, what could happen is inflation, specifically core, starts to come down more. We're seeing rents come down. We're seeing housing come down. We're seeing used car prices come down. Some areas of the economy falling precipitously.
Right.
So we're seeing those impacts and those inflation inputs coming down.
Hey, David, just quickly, 30 seconds here. You said it's an investable rally. Is something like Google and Microsoft with those shares down, is that something you would invest in just quickly?
Yeah, I think for a trade, certainly, and longer term, these are the secular growth stories. I think the difference is as we look further out, what are going to be the leaders? There's been this conversation about will it be technology? It has been for the last 10 years, or will there other leadership? But certainly for a trade, these are certainly investable.
All right, good to know. I really appreciate your time today. David Kudla, he's founder, CEO, and CIO of the Mainstay Capital Management firm. They've got some $3.8 billion in assets under management, joining us once again on the phone from Michigan. All right, just about 2.5 minutes left in today's trading session. We're just hovering off our worst levels of the session. Time to head over to our TV colleagues for Beyond the Bell. It is live on radio, TV, YouTube, and on Bloomberg Quick Take. We're counting you down to the close.
Beyond the Bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, and YouTube to parse the most crucial moments of the day. And really, Carol, it's about a look ahead here to the big earnings we get after the bell.
Yeah, well said, Romaine. I'm thinking about Meta, which was already down almost 6% in today's regular trade. So what will we get from that company in particular? Those big tech names, as they have reported this week, look at Microsoft, look at Alphabet today. They really have underperformed in a big way. So we'll see what we get from Meta and whether or not that trend continues.
Well, what have investors priced in? Because we got Alphabet yesterday, and investors were certainly disappointed by what they saw specifically with YouTube's revenue. And also what we got with last week with Snap. Is that a harbinger of things to come for Meta platforms?
I think it is. Most of the analyst reports that we've read this morning have said, watch out, that this was supposed to be sort of the end-all, be-all, right? These are the big tech companies with the great balance sheets and the ability to turn out cash flow. When this finally was a little bit of a moment of weakness that we saw within both companies a little bit, and it is sort of a wake-up call, again, on the bullishness of big tech.
I did think Mandeep Singh made a great point, and to the point that Meta has only 4 sells, 42 buys on it. He's saying, look, in many ways they kitchen sinked it already. They've been highlighting that they've got these headwinds to come, unlike perhaps an Alphabet that hadn't steered the investor base quite as well as
I'm sorry, is kitchen sink on the tip of your tongue
I
because
know,
of
it
Elon
just
Musk?
is. There's a guy out there who's making a few, statements, theatrically speaking.
All right, about 280 stocks in the S&P 500 are higher here on the day, but you were just talking about it there, Tim and Carol, with Microsoft down 8%, Alphabet down 9%, biggest one-day declines in those stocks that we've seen since March of 2020. Boeing shares also down 9% here on the day as we get the closing bells. You add it all up, you get a Dow Jones Industrial Average that is basically unchanged here on the day. It's up by about 3 points, almost too small of a change here to even quote the percentage. It is in the green, the S&P in the red, down 0.7%, the NASDAQ composite down 2%, and we did see some strength in those cyclical names. The Russell 2000 up 0.4%, Dow Transports up 1%.
Yeah, and Romaine, VIX easily staying below 30 at this point, dropping another point in today's trade. We've seen it down a couple days in a row here, and the VIX, Taylor, wrapping up just above 27.
Yeah, you see a little bit of the outperformance in the small caps. Come and take a look, Carol, some of the outperformance within a sector level. I think this really highlights the gainers and the losers because there's a lot of green on the screen. It's energy, it's healthcare equipment, it's pharmaceuticals. So you get a sense of defensiveness, but then, of course, with energy and auto components, it does feel sort of risk on. Coming down to the worst performers, there's a little bit of green here in the red, but a majority of it still is red, Carol. And you come and take a look at the underperformers. You don't need me to point this out. It's semiconductors, tech hardware, software and services, and media and entertainment. That's off 5.7%. We know who those big players are.
Yeah, no doubt about it. As we await Meta earnings and a few others, real quickly, those Chinese names, outperformers, Pinduoduo, top in the NASDAQ 100. It was up about 12% in today's session. So just wanted to point out that we did see some bounce back in a big way among those Chinese names that trade in the United States. Universal Health, this is an earnings story, reported adjusted earnings per share for the third quarter that beat the average analyst estimate. It raised the entire sector. Universal Health up about 13%. So really some strong gains.
Yeah, biggest gainer in the S&P.
Right? It's huge. And then another outperformer is Enphase Energy. Caught my attention. It was up almost 10% in today's trade, surging the most in about 3 months. The company beat forecast expectations, announced plans to expand in the U.S. following the passage of that, of course, clean energy law that has really helped this sector. But again, some outperformance there, Tim.
All right, well, let's talk underperformance. And Romaine, you mentioned all three of these companies. They're so important, they are worth repeating. Starting with Microsoft, it fell 7.7% today, the most since March of 2020. The company yesterday after the close reported its slowest quarterly sales growth, or weakest quarterly sales growth, I should say, in 5 years. It was really that lackluster forecast, though, for Microsoft Azure, its cloud computing division, that has investors really concerned. And then there was, of course, Alphabet, the parent company of Google. Third quarter revenue coming in weaker than expected. It just reinforces concerns about a slowdown in the global ad market. We'll be thinking about this as we digest Meta earnings in just a few minutes. YouTube in particular seeing growth hampered by a pullback in ad spending, falling $400 million short of estimates. Yeah. And then Boeing down close to 8.8% today. It did report results that actually beat expectations in terms of free cash flow, but they dropped sharply after the company lowered its delivery estimate for the 737. The company said it may discontinue the smallest and largest 737 MAX.
Meanwhile, let's have a quick look at what's happening cross-asset, because today was a day where, once again, it was dollar weakness. It was the fact that you get the pound moving higher. Oh, we're still on your industry groups right now. I'm sure someone's going to tap into GMM, Global Macro Movers, which, of course, is a show that commodities are rallying because dollar is on the weaker side. We've got perhaps a little bit of strength in Canadian dollar, but not much. That's because, of course, the Bank of Canada just shows that, well, maybe you don't have to go at 75 basis points each clip. They did a 50 basis point raise. And, of course, we are, of course, seeing the likes of, in general, a move higher versus US dollar, weaker by 0.9%. I'm looking at oil on the higher side as we see exports perhaps be on fire once again for oil. And I think it's notable that really this dollar weakness speaks to some of the economic data we got today, guys. The fact that we got a weaker housing data and exports versus imports. Imports looking really strong at the moment. Of course, what does that mean for your GDP that we start to see at the end of the week?
Quickly, no big story here. A second day of yields really falling across the curve. We're coming down about 6, 7, 8, 9 basis points after a significant decline of about 15 basis points lower in yields yesterday on a 10-year yield. So again, as we await another minute, 45 seconds or so, Carol, for these big tech earnings, it's a focus on lower discount rates, but at least today not providing a boost to those high growth stocks.
Can we go through some of the earnings that we have started to get here? Because, I mean, we've gotten some smaller ones out, and, I mean, it kind of paints sort of a broader picture, I think, of what's going on. Align Technology, which, of course, does the aligners here, that net revenue missing pretty big time here, as well as the EPS, adjusted EPS of 136 versus 217. The numbers themselves, I just bring it up because the numbers themselves are almost inconsequential. It's really about the idea of some of these businesses that were sort of legitimate growth stories not necessarily being that anymore. Meta probably fits into that category.
Or did we just
in a
all
bigger
fix
way.
our teeth during COVID?
Well, not everybody's teeth are fixed. I've been, well, okay, yeah.
You're doing some self-improvement, and it looks lovely, Rebecca.
Well, it's going to be interesting, right? I mean, we've really seen how the disappointment on some of these big tech names. We've seen the trade very clear.
All right,
Ford,
let's do it, guys.
Ford, by the way, just crossing. Recording a $2.7 billion non-cash pre-tax impairment on its Argo stake. That Argo stake, let me get it out. So that's a big deal. I know we want to get to Meta because that's just crossing.
Yeah, and we are seeing actually users coming in stronger. Third quarter Facebook daily active users at 1.98 billion. Overall, they are seeing revenue of 27.7 billion. That's slightly ahead of expectations, 27.4 billion. The earnings per share coming in at $1.64, though. That is well below the estimate of $1.89. They're pushing us forward. Fourth quarter revenue will be 30 to 32.5 billion. That's just basically the top end is only just eclipsing overall estimates. And we are seeing ad revenue coming in at 27.25 billion. That's actually a beat, so maybe that's a relief to the market. We're surging up more than 7%, and in fact, that was the size of the headwind as well from the FX basis. But here is a company that's managing to actually bring in the ad revenue that many had anticipated, as we do see also a big spend on Reality Labs, which sees an operating loss of 3.67 billion. This is a company that is still investing for its future with a big loss there, as they still see some concerns around overall advertising revenue coming in basically in line, but that is, of course, is a pullback year on year. The headcount end in 2023 will be about in line with the third quarter of 2022, so they are not going to be adding more people, and they're also making changes to the board to operate more efficiently. and they're increasing their scrutiny on all areas of operating expenses. There is your talk of discipline, I think, guys.
Let me go back to that ad spending, though. I mean, and the stickiness that we've seen there. I mean, what has been the story for really the last several years here? The idea that if you're looking in the digital ad space, there's kind of one place where you have to be, and that's on the various platforms, whether it's Facebook, Instagram, and whatnot.
Some teams are flat in headcount, shrinking other teams within that segment as well. I think Mark Zuckerberg sums it up when he says we focus on near-term challenges on revenue. We're focusing on fundamentals, but we're looking for a return for stronger revenue growth, really looking in 2023 at prioritization, efficiency. It's going to help us navigate this current environment. So really highlighting the headwinds and the slowdown.
All right, so we are seeing Meta bounce around. Ford shares, by the way, they're down about 1.7% as we speak, also bouncing around in the after hours. Here's some of the big headlines. Talking about the year adjusted EBIT, about $11.5 billion. It had seen 11.5 to 12.5, so it's reining that number in. Also, we mentioned the headline, its investment in the Argo AI autonomous vehicle technology company backed by Ford and VW. Our team reported earlier that they would have an impairment. So they're recording a $2.7 billion non-cash pre-tax impairment. And we are seeing shares of Ford, Caroline, down about 1.5% in the after hours.
Let's return to Meta Platforms, of course, because many had been anxious after the Alphabet numbers. A man who's always steadfast and relaxed about these numbers is Mandeep Singh, Senior Technology Analyst over at Bloomberg Intelligence. And the fact that Mark Zuckerberg is talking about near-term challenges on revenue, but saying that they will return to stronger revenue growth, that sounds pretty optimistic.
It is, and I think if you look at the numbers, the constant currency number, even though it was 2%, it's a beat. And look at the impressions growth, 17%. That's pretty impressive. So that just goes to show that, you know, people are spending time on Facebook properties because that's how, you know, you're driving those impressions. Although it was offset by the ad pricing, which was down 18%. So we saw that yesterday from Alphabet, ad pricing was down 5%. So clearly there is some Apple IDFA impact baked in. Again, the guidance was so low and they had already guided to that impact. So clearly it's a better print than what a lot expected. To me, I think one other thing that stood out was the OPEX guidance. They lowered it further, the 85, even though it's $1 billion lower than their prior guidance. And that just goes to show that they're very serious about the cost cuts. Remember, we were talking about, you know, how Alphabet costs are out of control, and they are now trying to lower it. In the case of Meta, they probably started it a quarter earlier, and that's what it's reflected.
Mandeep, shares down about 7.6% in the after hours right now. They were higher as much as 7% just a few minutes ago after the company reported. Investors continue to pour over these numbers. I want to go to Reality Labs here because this is the pivot for the company. Reality Labs revenue coming in short of expectation, then operating loss for Reality Labs coming in larger than expected. How should investors read into where the company is when it comes to this pivot so far? Because yes, we're talking online ads here, and that's certainly important. But the company said it's going all in when it comes to the metaverse.
Yes, but look, I mean, it definitely doesn't contribute to the top line, and we see that, you know, the Reality Labs number, top line number, even though it's small, it missed expectations. And look, no one is buying virtual reality headsets right now if we're talking about a slowing economic environment. So clearly, I think those losses are kind of making the investors nervous in terms of how long they are going to continue. And from a Meta perspective, they really should curtail back on the longer-term initiatives here. Clearly, they have, you know, tried to stabilize the core business, which is what we see in the numbers. But as long as they keep losing money, you know, $3 billion on Reality Labs, that's going to definitely spook investors.
All right, we're going to leave it there. Hey, Mandeep, thank you so much. Of course, Bloomberg's Mandeep Singh. He's Senior Technology Analyst for our Bloomberg Intelligence team. And as we wrap, we've got shares of Meta down about 6% in the after hours, Ford trending lower, down about 2.5% as well. All right, that is a wrap for our cross-platform coverage on radio, TV, and YouTube. We will see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stennebeck and Carol Masser. Let's go over to Charlie Pellet for an update on all the after-hours action. Hey there, Charlie.
Well, hello there, and here's what's going on. We've got the Dow higher, S&P, NASDAQ. They both closed lower, but the big story after the close of trading, you guys were talking about it, you covered it. Meta Platforms, it did report revenue for the third quarter that beat the average analyst estimate. However, we've got shares of Meta trading lower now, down by 6% after hours. Also, the other closely watched stock after hours, Ford. Third quarter adjusted EPS 30 cents, estimates 31 cents. We've got Ford down by 1.8%. Argo AI, that's the autonomous vehicle tech company backed by Ford and Volkswagen, will shut down as the giant automakers shift their strategies for self-driving cars. Wall Street saw another session of twists and turns today. Stocks did snap a three-day rally. Treasuries gained as investors mulled the Federal Reserve's path after the Bank of Canada announced a smaller than expected rate hike. S&P today down 28, drop of 0.7%. The Dow up 2 points, little change there. NASDAQ down 228, down by 2%. 10-year yield 4.00%. Spot gold up $11 the ounce, up 0.7%. $16.64 the ounce, while West Texas Intermediate crude rallied 3.3%, $88.15 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, really appreciate that. Charlie Pellet keeping abreast of all of the breaking earnings news after the closing bell. Let's just go back there because that's our top stories at this hour. Shares of Meta, they continue to trade lower. They're, in fact, pretty much near their lows in the aftermarket, down almost 7%.
Yeah, it's the second straight quarter of revenue declines from the year earlier.
Which was
quarter,
expected, right?
It was. Last quarter was the first decline ever. But remember, this is a company, as Sarah Fryer, our big tech team leader, writes on our live blog, that got so used to growing with no end in sight, and now they have to adjust to a period of intense prioritization. I mean, there's been so much reporting, Carol, around the way that it's reprioritized the metaverse, right, inside the company. But still, the numbers that investors are focused on are the core product, the family of apps revenue number.
Yeah, listen, investors like when companies are thinking about what the future is, but at this point where the money comes from, it's still the old business. We're talking about Facebook. Mark Zuckerberg, Meta founder and CEO, saying in the release, our community continues to grow, and I'm pleased with the strong engagement that we're seeing driven by progress in our discovery engine and products like Reels. He went on to say in the release, while we face near-term challenges on revenue, the fundamentals are there for a return to stronger revenue growth. We're approaching 2023 with a focus on prioritization and efficiency. I believe that looks like a typo, though, in our notes. That will help us navigate the current environment and emerge an even stronger company. Sounds like a CEO.
It does.
Not being critical, but they're thinking about long-term strategy.
Give us some details, though.
What do you
I'm
mean?
sure there will be asked on the conference call today.
How do you
about,
get there? How do you do that pivot?
Yeah, how much is it going to cost?
And it's losing you money now, but right, you have to invest for the future.
Hey, for some details, let's go to James Chakmak. He's a partner and technology analyst at Clockwise Capital. He joins us via Zoom from Miami, a familiar voice to anyone who's been listening to us over the last few years. James, always great when you join us. You previously were a tech analyst and you followed Meta Platforms for years, so I want to start there with you. And correct me if I'm wrong, it's not a company right now that you guys are bullish on, right?
Well, we do have a very small position in it. The logic there is that the Apple privacy changes will be anniversarying at the beginning of 2023, which should make the comps easier as we look into next year.
Oh, good point.
Obviously, the Apple news this week about additional changes to the App Store where taxes may be levied on ad purchases within the app can possibly change the calculus a little bit. But this is one where the estimates were already knocked down significantly following Snap, following Google, Alphabet, and obviously not quite working out today, but that's why it's a small position and not a high conviction large one.
Our Sarah Fry had a great story about this. Meta criticizing Apple for changing its App Store terms to take a portion of social media ad revenue, saying the iPhone maker was, quote, undercutting others in the digital economy. James, I'm glad you went there, and there's more on at Bloomberg.com if folks want to kind of understand what's going on. Having said that, so all right, what do we know? We've heard from Microsoft, right? We've heard from Alphabet. We heard from Meta today. We're going to get Apple and Amazon tomorrow. So far, how is it shaping up as you expected, and what's the takeaway? And are there investment plays here? Is it investable, as our previous market guest said, that, yeah, I would maybe be buying some of these big tech as they are pulling back?
I think the outperformance as we look over the next year is going to come from not from the mega cap companies, outperformance relative to the market, not from mega cap, but rather the smaller companies that have had to experience the largest amount of pain, and likely will be in a position to exceed expectations over the coming quarters. You know, companies like CrowdStrike and Snowflake, and that have not quite, not quite getting the love from the market relative to the performance that they're delivering. But as far as timing on investments is concerned, you know, we think that this is the first. I mean, the main issue has been that estimates haven't come down far enough. You know, as you look into the coming quarter, you know, you have the bulk of earnings attributable to the fourth quarter for a lot of companies. Obviously, 2023 is a question mark, and the estimates haven't come down as sufficiently as we'd like to see, which is why we've been extremely cautious with every position that we've had. But I think following this quarter, following kind of the huge question marks around Microsoft's, you know, cloud business growth rates, and now Alphabet, you know, those kind of unexpected declines from YouTube. I do think that, you know when things are bottoming, when you feel like it can't get any worse.
Yeah.
And I think we're close to that. So we're becoming increasingly constructive on a certain group of names.
Constructive means buying, right?
Right.
Okay.
Just checking.
Yeah.
Well, so, I mean, you say it can't get any worse, but I think we could have had the same conversation 3 months ago with some of these companies. I mean, do you actually think we're at a place where it can't get any worse?
Not for the broader economy. We think from a macro standpoint, things can get worse. It's more how low will estimates go, where you stop having negative surprises. I think the last time was on with you guys was right after FedEx.
That's right.
Came out with their numbers, and you know, so we've been seeing a trend of yes, it can get worse, and how quickly you know, demand was destroyed by the Fed, and FedEx numbers at that time were case in point in that, and clearly it's trickling into the strongest companies in the world. But it all comes down. I mean, stock performance is all how is the company doing relative to expectations. So can the economy get worse? Yes, but have expectations come down sufficiently? We got to see where estimates shake out.
Right.
My hunch is that they'll shake out too low. But if they do, then I think it's time.
I love that you went there, because we talked earlier about Morgan Stanley CIO and Chief U.S. Strategist Mike Wilson, who has been named top, I think, an Institutional Investor magazine in terms of making calls when it comes to analysts. And he said, you know, right to what you were talking about, James, he says, we're not going to get the full capitulation from companies on 2023. We think it's going to take longer. Like, you haven't seen companies saying, I have no idea what's going on. Like, we haven't gotten that, right? And so you're still waiting for those for companies to kind of say that, right?
Exactly. I mean, you got to start hearing a little bit more of a kitchen sink kind of commentary. And for example, Microsoft.
Are you watching the Elon video?
Everyone's saying kitchen sink.
Is that the Elon
Musk
video?
did this
Is
video.
that what
Did
you're
you see
doing?
that, James?
No. I mean,
okay, so there's a video that he posted. He posted on
Go
Twitter,
ahead.
earlier this afternoon, roughly an hour ago, of him walking into Twitter headquarters today with an actual kitchen sink. He said, let that sink in, but I think the way a lot of us are interpreting it is, right, like you're trying everything, throwing the kitchen sink at it.
Yeah.
Didn't look like a kitchen sink, by the way.
It looked like a light one.
Well, I mean, if you think about 2008, you know, we had the highest PE ever recorded when every company said, we have no idea what's going to happen.
Interesting.
And we're not sure that, you know, companies are quite doing that now, but it's really not as much what the companies are guiding to. It's where the buy side expectations are. And unfortunately, the street expectations have been a little too high, but the buy side expectations have been lower than where street numbers are for the most part.
Yeah.
So if those two things start to converge, I think the setups could be good. And I think Microsoft's kind of cautious cloud outlook relative to how they performed in 3Q is a little kitchen sink-esque, I should say.
Not one of those big double farmhouse things, right? Or something. Hey, can I just go back to Meta for a moment? Because we have a great live blog, James, and Sarah Fryer, our big tech team leader, so knowing on this company, has written about this company nonstop and in a book. There's a quote that came out, and it says, we do anticipate that Reality Labs operating losses in 2023 will grow significantly year over year. Beyond 2023, we expect to pace Reality Labs investments such that we can achieve our goal of growing overall company operating income in the long run. So this is, as you said earlier, Tim, this is about metaverse going forward. So they're basically, right, guiding us like, we're going to continue to lose money. We still think this is the future, but we're going to lose money.
Yeah, Sarah's fantastic, by the way. Yeah, I mean, those investments there are going to continue, but you have to also see more cost discipline on the core side of their business. I have no problem with them investing in the future, but what I do take pause with is aggressive hiring and bonus practices and whatnot for their core business, which is an extremely, extremely mature business. And I mean, you can say digital advertising is mature. I mean, and so I want to see more cost discipline there and make the bets where it matters and pull back where it doesn't.
James, it's interesting because we saw the TikTok effect. We oftentimes talk about that in the context of Facebook and Instagram, mostly Instagram. But we saw the TikTok effect play out yesterday when it came to Alphabet and YouTube. And it just shows the power that TikTok has right now. I mean, how should investors think about the competitive threat to multiple businesses that TikTok poses?
In 2 words or less, or 5 seconds, because that seems about everybody's attention span at this point. Sorry, go ahead, James.
Are you making a TikTok joke?
I kind of am. Like, right? Like, nobody wants to do... Anyway, go ahead, James.
No, TikTok is a threat. There's no two ways about it. But at the end of the day, Meta has 2 billion, give or take, users. Google, Alphabet controls 80% of the search market. So I don't think those are going to change. Do engagement rates change? Probably ad pricing and possibly. But for Meta, Street's looking for around 8% revenue growth next year. I think that's completely reasonable. That number is probably going to come down after today. So again, expectations versus what they can actually post, I still think is set up nicely on the long side. But then again, to caveat it, I feel like I have to caveat everything. Then you have this wild card curveball from Apple this week, which Sarah reported on also,
prices,
and it's like, can they catch a break?
Well, and going just back to Meta for another moment, on our live blog, Sarah putting out there that the best news for Meta here is that its social media platforms are still growing. And she's got a great bar chart and showing, as you said, James, I mean, you're talking about the billions of people that are on Meta's platforms. I mean, that's a valuable asset, no doubt about it. And we have to remember that when we talk about kind of the bigger, broader either pivot of this company or just the bigger, broader story. James, sit tight. I know you're going to hang around for us, which we're so grateful for. We're going to come back to James Chakmak. He's partner and technology analyst at Clockwise Capital. Talk a little bit more about what we're seeing in the tech scene and maybe talk a little bit more about Amazon and Apple. What?
Yeah, I'm looking at shares of Meta. The stock market's closed now, but in after hours, it's down significantly, as much as 12%, which if it were to open now, would be trading at $115 a share, Carol. I go back and looking on the chart, you wouldn't, you have to go back more than 5 years to find a time when Meta Platforms was trading for that price.
And that's after losing, 6% in today's regular session ahead of the report.
62% this year.
Yeah, it's a big haircut. But again, if you believe in the story, does an investor come in and say, okay, that stock's now hugely on sale?
2016 is when you have to go back to.
Yeah, and do you buy into that drop? We will know tomorrow. We're going to come back with James Chakmak in just a moment, right here on Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, got to say, as we watch Meta shares in the after hours down about 11, 12%, we're going to keep talking big tech for you. And lucky for us, James Chalkmark is hanging around with us.
Yeah, he's partner and technology analyst at Clockwise Capital. He's in sunny Miami right now. We're going to get back to him in just a few minutes. But Charlie Pellet's standing by for an update on all things happening because it is a busy afternoon, Charlie.
Indeed, cannot ignore Meta Platforms. Got to begin there. Shares plunging after hours, down now by 12%. Meta forecasting revenue for the fourth quarter of $30 billion to $32.5 billion. Estimates $32.2 billion. So again, we've got shares of Meta plunging after hours. Ford shares also trading lower. Ford has narrowed its profit forecast for the year, saying 2022 earnings will come in at the low range of earlier estimates. Today we saw Alphabet after earnings plunging by 9.6%. Microsoft earnings dropped by 7.7%. Turned out to be a down day for the S&P and also for the NASDAQ Composite Index. Certainly, we had shares of Google and also Microsoft weighing on investor sentiment today. Dave Kudla is the CEO of Mainstay Capital, and he was our guest right here on Bloomberg Business Week.
What we've seen with Alphabet, Google, YouTube, Snap, we've seen that advertising revenues are falling. And I think it says, this is big tech week for earnings, and it's saying more about what's happening with ad revenue for some of these big tech companies, and the revenue on ad spending is falling, revenue is falling as a result of that.
Well, today we saw the S&P fall 28 points, down 0.7%. Choppy day for the Dow. Ended with a gain of 2 points. Little change there. NASDAQ down 228, drop there of 2%. 10-year yield 4.00%. The 2-year 4.42%. Spot gold up 0.6%, 16.63 the ounce. This headline from the Bloomberg Professional Service: U.S. officials have been forced to scale back a plan to impose a cap on Russian oil prices following skepticism by investors and growing risk in financial markets brought on by crude volatility and central bank efforts to tame inflation. Again, that is a developing story after hours. West Texas Intermediate crude up 3.3%. Brent crude today up by 2.5%. Brent, of course, the global benchmark. I'm Charlie Pellet. Lots going on. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Meta shares down 11.65% as we speak. Shares tumbling as revenue forecast
they're not
misses at
bouncing
midpoint.
back here in the after hours.
They're really not. And look, the call hasn't started yet, so we'll wait and see what happens then. The company expects to lose more money on the metaverse bet next year. We got still with us James Chalkmark, partner and technology analyst at Clockwise Capital, joining us via Zoom from Miami. So if you're watching on QuickTake or YouTube, you can see him right there. Hey, James, Zuckerberg continues to highlight the near-term challenges when it comes to revenue. But as you mentioned in our previous interview, you guys do have a small position in Meta Platforms. What is the opportunity that this company has to actually pivot and own the metaverse, especially when a company like Apple, which we're going to talk about in just a second, we know is working on augmented reality?
Right. I think it's important for investors to separate the cyclical versus the secular. Obviously, all these big tech companies are facing huge cyclical pressures as uncertainty over broader economy looms, and like ad dollars, as a discretionary spend, it's typically the first to go, and you're seeing that evident in the results. But on the secular side, dollars will continue to move digitally, no matter what, whether it's ads or the cloud-based services. So the secular is still very much intact. So you want to buy companies that are secularly advantaged, but cyclically depressed. With respect to the metaverse, we're not fully sold on the grand vision. That,
you look like you're living in the metaverse right now. Isn't that the metaverse behind? No, I'm just kidding. For everybody on radio, you can't see James,
this picture,
but he's got a
That's
skyline,
Miami back there.
a Miami skyline
Miami
behind
skyline,
him.
Yeah. We're not fully sold on the grand vision yet. Maybe 10, 15 years down the road, maybe. But as far as the productivity-based tools that can be implemented in the workplace and workplace collaboration and alternative communication methods. There are more tangible applications of the metaverse that can be applied more near term. We didn't buy a small position in the stock based off of that. That was purely an optionality. It was more around, how low can estimates go, and is the anniversarying of the Apple privacy change is going to be a boost from easier comparisons as we look into 2023. So that was the calculus. Clearly, we should have fully sold out of the position heading into it, but you got to do that calculus on how much was priced in, on how low expectations got, particularly after Alphabet results.
All right, so just got a couple minutes left here. Help our Bloomberg audience just get an idea of what we should be watching out, what you will be watching, maybe something that will come out from Apple tomorrow that might be investable for you, or something that might make you pare back.
Well, Apple and Amazon have been slightly larger positions, certainly relative to Meta. But we're cautious about it and thinking about potentially reducing exposure there. Obviously, the Tesla's news coming out of China was not encouraging with respect to Apple. Apple is very cyclically exposed. I think the Mac numbers should be okay. The iPhone numbers should be okay. But at the end of the day, what does the fourth quarter outlook look like? And we're not sure everything is priced in at this point. So depending on how things shake out tonight and how the market looks tomorrow, potentially might be reducing exposure there. And then with respect to Amazon, that's probably the only one where there may be the largest disconnect between the street and the buy side expectations. So, that's one that we are also cautious on. Obviously, we're hedging the whole portfolio with, against broader macro risk and market risk. So protected to a certain extent on that side. But Amazon one, it's interesting because we feel it's the most undervalued relative to all the other big tech companies, relative to their growth rate, relative to its growth potential and market potential. But it's also the one with the greatest disconnect between buy side and sell side expectations. So, we're cautious on both, quite frankly, heading into the quarter tomorrow.
James, 30 seconds left. I want to just circle back to Apple real quick and the China risk there. Carol spent a lot of time in the last few days talking about this. How should investors think in 30 seconds about the China risk?
I think it's material. I mean, you have a good chunk of their business coming out of there. It's a huge driver of iPhone sales and iPhone Mac sales, Mac as well as MacBook sales. So it is a risk, and the slowdown there is something. I mean, we're cautious. I mean, there's no other way to say it.
Yeah, some $68.4 billion in revenue for 2021, and it's had about a 3-year average growth rate of more than almost 10%.
19% of the company's revenue coming from China last year.
So it's some serious stuff. All right, James, as always, take care. James Chakmak, partner and technology analyst, our thanks to you. He's, of course, at Clockwise Capital, joining us via Zoom from Miami. NASDAQ 100 E-mini futures, they're down about 2.2% in the after hours.
And Nancy Lyon standing by in her 99.1 studio in D.C. Hey, Nance.
Thanks, Tim. U.S. Secretary of State Antony Blinken says China is undermining the decades-long status quo that has kept both countries from going to war over Taiwan. And he tells Bloomberg in a wide-ranging interview he believes Beijing is trying to speed up its seizure of the island, which should evoke global concern.
If there's any crisis regarding Taiwan, we've got 50% of container ships on a daily basis traveling through the Taiwan Straits. The implications of a crisis, if that were disrupted, for the world economy, for supply chains, are significant.
Blinken tells Bloomberg the U.S. is focusing on strengthening partnerships with our allies rather than trying to influence China's internal dynamics. With inflation front and center for most Americans, President Biden says he's directing his administration to target what he calls unfair junk fees that companies charge for things ranging from hotels to concert tickets. It would even extend to overdraft fees at banks, which the president calls unfair.
Today's actions are going to save consumers more than $1 billion each year. And that's a lot of money back in people's pockets.
Biden says he knows Americans are frustrated with the high prices on almost everything, but he believes his administration's actions will help. A Wisconsin jury has convicted Darrell Brooks Jr. in the deaths of 6 and the injuries to 60 others. He ran his vehicle into a Christmas Christmas parade in Waukesha, Wisconsin last year. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. You are listening and watching Bloomberg Business Week. Carol Massar along with Tim Stenovic. And we've been having some fun with this, trying to make references, trying to work sync into every conversation we have. This story, by the way, among our most read on the Bloomberg. And if you're watching on YouTube or Bloomberg Quick Take, we're going to share it with you as well for those on radio.
Are you talking about Elon Musk?
Just picture yourself.
Are you talking about Elon Musk?
Yeah, am I?
Okay.
Did I not say
No,
that
that's
right?
right. That's right. So
making his presence felt at Twitter's San Francisco headquarters today, posting a video clip of himself walking into the offices carrying a kitchen sink and changing his public profile descriptor to, oh my God, Chief Twit.
I guess it's happening, Carol. I mean, don't say it's happening until it's signed on the dotted line.
Nothing like contracts and a court-appointed mandate to get this thing done.
Yeah,
by
here
tomorrow.
we are.
No, Friday, forgive me.
Okay, so he's due to address staff on Friday. That's the closing deadline for a planned $44 billion deal to take the company private. The social media platform is expected to come under Musk's ownership by 5 p.m. New York time on October 28th. This is lawyers and bankers on both sides race to finalize paperwork.
Or from Lowe's.
That looked like an old sink. It wasn't like a new.
Had it under his
that looked like a
desk?
sink. That looked like a sink from like a college dorm. Truly, it did. Maybe it was outside
take me
on the
back
street.
there.
I don't know. He did. Twitter's chief marketing officer Leslie Berland sent a memo to employees on Wednesday saying that Musk was visiting the company's headquarters this week, according to people who received the note.
Yeah, he said Elon is in the SF office this week, meeting with folks, walking the halls, and continuing to dive in on the important work you all do. This was Berland again, Leslie Berland, the Twitter's chief marketing officer. She said, for everyone else, this is just the beginning of many meetings and conversations with Elon, and you'll all hear directly from him on Friday.
Shares of Twitter, $53.82 is where they are right now. So it's just still shy of $54.20. So there's still...
Those ARB guys making a lot of money on that?
I don't know. Maybe just a teeny bit of skepticism still. The question remains, though, Carol, what happens to Twitter under Musk's ownership, and what happens to employees who work there?
So a privately held company, right?
It will be.
It's going to be interesting. All right. Coming up, we're going to talk about unicorns.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Another big tech earnings casualty after the bell. Meta Platforms, parent of Facebook and Instagram, delivered a forecast for revenue in the fourth quarter that was on the low end of analyst estimates. After ours, Meta Platforms plunging now by 12%. Also reporting after the bell today, Ford Motor, it narrowed its profit forecast for the year, saying 2022 earnings will come in at the low range of earlier estimates. Ford shares down now by about 1.7%. Mobileye Global, the self-driving tech company spun off by Intel, scored 2022's biggest trading debut gain for a major U.S. listing after raising $861 million in an IPO priced above its targeted range. Today, Mobileye was up by 38%. The Dow higher by 2 points, little change there. Stocks did snap a three-day rally with the S&P down 28 points, a drop there of 0.7%, closing very close to the lows of the day. We had NASDAQ down 228, plunging 2%. Among some of the big names that helped send NASDAQ down today, Alphabet, parent of Google, down 9.6%. Microsoft plunged 7.7%. 10-year yield 4.00%. Spot gold up 0.7%. 16.64 the ounce. West Texas Intermediate crude up 3.3%. 88.18 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that update. So much going on, and Charlie all over it. Well, coming up next week, Tim and I are involved in a Bloomberg Live Growth Summit, talking with leaders of all industries on how they are finding growth, getting growth out of their existing businesses. And for more, you can head to BloombergLive.com to find out about the event or maybe join us. And in keeping with that, our next guest, because Mach 49, it's an incubator working with the likes of Goodyear, Hitachi, Intel, JetBlue, Shell, and more. And the founder and CEO is Linda Yates, and she's out with a new book.
Yeah, the new book is called The Unicorn Within, How Companies Can Create Game-Changing Ventures at Startup Speed. Linda joins us via Zoom from the Bay Area right now. And if you're watching us on YouTube or on Bloomberg Quick Take, you can see that shot. Linda, good to have you with us this afternoon. How are you?
It's great to be with you, Carol and Tim. Thank you so much.
Well, thanks so much for joining us, and congratulations on the new book. You know, it's interesting that we use the term unicorn here. As you write, there are more than 840 unicorns. That means that companies that are valued on the private markets at over $1 billion. That's equivalent to $2 trillion in market cap. The big question is how do you recreate what these disrupting startups are doing and do that internally at a company that's established to make sure that it's not being disrupted? What's the best way to do that?
So it's, you know, if you think about it, large companies absolutely have an advantage over the startups. And I'm a Silicon Valley kid, right? Born and bred there. But large companies have ideas, they have talent, they have channel, they have brand, they have customers, almost millions of them. So they basically have the opportunity to beat the startups at their own game if they can overcome the orthodoxies, the inertia, and the antibodies. So where we like to start with our clients is we say, listen, there's no reason you cannot drive disruptive growth from within. It's like a double helix, though. On the one strand of the DNA, you've got the venture investing and frankly, venture building. Both of those things kind of go together. On the other strand of the DNA, it's how are you going to basically seize the mothership advantage to help the ventures that you're building or the ventures you're investing basically reach escape velocity and thrive.
So, Linda, you're not against entrepreneurship and startups, right? Or VC and that whole world, but you're just saying that large companies should kind of be doing more of it on their own internally.
Absolutely. If you think about it, there was a report that came out, and if you think about the Fortune 500 50 years ago, the average life of a company on the Fortune 500 list was 75 years. Today, it's 15 years and declining. And if you look at that list from 50 years ago, 88% of the companies that were on the list then are now out of business, off the list, or completely irrelevant. Only 12% remain. And our whole thing is, listen, there is literally no reason that any of the large hotel chains couldn't have created Airbnb. There's no reason that Tesla could not come out of any of the large motor companies.
So
And
you're
there's
saying
really
be
no-
comfortable to disrupt your core business, which is so timely considering we're on a day where Facebook, now Meta, is looking to disrupt what it's been doing, and it has churned out billions of dollars, trillions of, I don't know, like if you add it all up right over the years. But you're just saying, like, be comfortable with that. And for investors, be comfortable when a company does that. Mary Barra has been doing it pretty aggressively at General Motors.
Absolutely. And in fact, this is one of the things that we talk about all the time is, listen, it's about understanding customer pain, marrying that with the art of the possible. What's the current technology and trends that you can bring to solve that pain, and then placing a series of small bets. The problem that large companies have is they often, they want to throw all this money into a single venture. It doesn't work, and they say, oh, that didn't work. Okay, we're not going to try that again, right? So our whole thing is, how do you remove the greatest amount of risk on the least amount of capital?
One thing I do want to say, and having worked with Johnson & Johnson a few years back and was out on the West Coast, out in San Diego, they did have essentially an incubator lab on site, and they encouraged startup companies to be in their facilities, tap into their expensive machines and expertise to work on whatever they're working on, with the idea that J&J could potentially get involved, invest, or buy them out, or not, but just gave J&J kind of an inside look at what entrepreneurs were working on, that they could basically maybe be involved in too.
100%. And so what we basically say is that what we're really helping companies do is build their growth engine, not just do venture building. In that growth engine, there are 4 arrows in that quiver. It's venture building, doing it organically, but it's also the buy, doing strategic and partnering, and also, so it's the build, buy, partner, invest. All of those are important, and that's exactly what is happening with J&J and a lot of these other things. 3M did that even in the very early days, right? 20% of people's time could and should be spent on doing innovation. So all 4 of those those arrows in your growth engine quiver are important.
So I'm wondering about, Linda, the idea of big companies not being able to pivot. And in some cases, it seems like it's because they want the smaller companies to fail because those ideas are expensive. The idea that, the next Pepsi or Coke or beverage, right, it could be developed outside of that company and then it would get acquired because they kind of do all the heavy lifting.
The venture capitalists and the right?
Exactly.
Like private money.
Let the private money do that work. So how do you sell this to investors? Because look at the difficulty that Meta Platforms is having selling this to investors.
Well, and I actually think that we are actually doing a piece of research right now called Valuing the Unicorn Within. Because if you actually think about it, our large companies are, in essence, held back by the financial markets right now. All of the startups in Silicon Valley, when they go public, they get a hall pass for 3, 4, 5 years. The markets know how to value them. They value them on customer acquisition. They value them on revenue. But our large companies don't get that same hall pass, right? Their ventures get judged by the core and legacy metrics. And so we're actually working with companies now to create whole new growth divisions to overcome exactly what you're talking about, which is to give them a chance to, in essence, even if it's a blended valuation, if you will, but it give them the chance to give their internal ventures the same types of valuations because they have the ability to be much more successful because of what the core competencies, assets, and capabilities that the big companies can bring to bear to help these ventures thrive in the open market. And so separating those two is becoming a very important strategy for a lot of our multi-billion-dollar multinational public companies.
No, it makes a lot of sense, certainly in this environment. Hey, Linda, thank you so much. Linda Yates, founder, CEO at Mach 49, her new book, The Unicorn Within, How Companies Can Create Game-Changing Ventures at Startup Speed. And as we said, really timely considering the pivot that Facebook, or formerly Facebook, now Meta, is doing as it steps deeper into the metaverse. Speaking of deeper, the stock, shares of Meta down more deeply, if you will, in the after hours. It's down almost 14% here.
Yeah, shares tumbling as revenue forecast misses at the midpoint. The third quarter was the second straight quarter of year-on-year revenue declines, Carol.
All right, don't forget, we've got what? Apple tomorrow.
We've got Amazon tomorrow as well.
These are big ones, and we're going to be doing a deep dive with our TV team, really getting into their results and stock reaction. For the whole Bloomberg Business Week team, I'm Carol Master, along with Tim Stenovich. Have a good and safe evening. This is Bloomberg.